Welcome to the Best of U.S. Investors weekly review of the markets. This week, we're going to do something a little different, and that is we're going to look at charts. We're going to look at the comparisons between the different indexes versus the bond market. And what this is going to tell us is, are we truly in a rotation? Are we in a crash? Or is this just a simple small correction that we're experiencing over the last week? So let's get going. First off, we are comparing ETFs here, exchange traded funds. We're comparing the Lehman Brothers Aggregate Bond Index, which is AGG, compared to, in this case, SPY, which represents the S&P 500. What this does is basically it looks at which direction, which is more in favor. And as we can see, if we go back to 2020, we saw that this red line represents the comparison between the two. Now, in March of 2020, what happened? Pandemic, COVID. Where did money go to? It left risk on assets, in this case, the S&P 500, and it went to Aggregate Bond Index, or the Lehman Brothers Aggregate Bond Index, AGG. But soon after, it fell and the market went back to risk on. A lot of different things drove that. Since July of 2020, or just earlier than July of 2020, the S&P 500 has continuously, with every so often, a correction of some level, gone up in value. So if you had bought in July of 2020, the S&P 500 and held it, you've done pretty well in that time. But recently, in this week, as we can see here, we've seen a small correction in the S&P 500. In particular, three of the companies that represent 35% of the S&P 500's movement, and that is Apple, Microsoft, and Nvidia. But we're now seeing a small turn up in the aggregate, the flow of money moving towards risk off, and in this case, the aggregate bond index. Is it something right now that you'd be going, oh, we should do something? No. The blue line here represents a 20-week moving average. I'm looking at this from a weekly standpoint. So this movement from last week to this week is 1 week. So let's keep that in mind. When does this get interesting? Is when we see big events like we saw back in March of 2020. But as you can see, it corrected itself pretty rapidly. XLK, which is the index for technology, ETF for technology, and that is in comparison to the aggregate bond index. And as you can see, we had that moment between 2022 and 23 where it was risk off. People left risk, in this case technology, and they went to bonds. So then we had a rotation back to risk on in 2023, and we have seen this technology ETF XLK skyrocket up until this week. And really over the last 2 weeks, but really this week, much of this has been driven in the case of Donald Trump making the comment that Taiwan should be paying the United States to protect it from China. That was a geopolitical macro event. Those things can move markets. The other element of this is the economy really doing as well as we are led to believe? I'll leave you to answer that question. But what we're seeing here is this movement in XLK dramatically selling off this week, over the last week and a half or so. And we've seen this happen a handful of times over time, hitting the 20-week moving average and then rebounding. The question is, will we see a replay of the back in April, May of a bounce off the 20-week and move higher, or will we go through this? This only time will tell. We'll know more at the end of next week to see where the technology or the risk on asset class ends up for the week. If we see a penetration through the 20-week, something to take notice of. XLC is communications. It represents the communication network. Like the XLK, the technology ETF, it skyrocketed from the beginning of 2023 through 2024, but here recently in the last couple of weeks has actually pulled back towards the 20-period moving average. We've seen it do it at the end of 2023. We've seen, and it continued then to bounce off and move higher. Are we going to see the same thing happen again in the coming weeks? XLY is the discretionary ETF. Understand 22% of this ETF is represented by Amazon. Okay, that's a big chunk. The other big player in this index is Tesla. What has happened to Tesla in the last couple of weeks? It has gone through the roof and hitting a bit of a resistance level here recently. So those two companies have been pushing the XLY higher versus the aggregate bond index. But like many of the higher risk asset classes, it has started to show signs of pulling back. Maybe not as aggressively as the XLK, but it is starting to pull back because it has some high beta, high risk assets in this that represent some big money, and that it would be Amazon and Tesla. The question is, will this continue to be strong? Will it come down to the 20-week moving average and move higher? We'll find out later next week. And XLP, the Consumer Staples Index. This is one that this is the index that represents the things that you have to live. You have to have shelter, you have to have food, you have to have water. Okay, those are three. Well, really, I guess water would go in with food. So those are two things that are essential to life. And when you see markets rotate from risk on to risk off, you see a rotation into the necessities. And in this case, consumer staples. We have seen a rotation into this year. Is it as exciting as XLK? No, it's not. It's not AI. It's food. It's water. It's what just you consume and eat. The challenge is it costs more now because of inflation. But what are we seeing here? This small base forming situation here and a move off the 20 this week. Could XLP, the Consumer Staples Index, be the next big mover? Could this be where money is rotating out of high risk, high beta technology into low risk necessity items like consumer staples? We'll see more confirmation as the weeks and months continue on and go forward. This is created by our founder, Kerry, and it is a fundamental analysis of AI-related companies. Kerry is high on AI. It's the sector he is into, he enjoys. He gets into the fundamentals of it, the earnings per share, revenue, PEG ratios, PEs, the whole bit. He then calculates based on their forward earnings projections what he believes that stock price will be worth in the coming 2025 or 2020, end of 2024, 25, out all the way out to 26. So this is a very strong tool that you can then couple with our swing trading watch list or swing trading education. Mark runs this part of our company. He is a technical analysis guru, and he teaches you how to swing trade. And many people think swing trading is all about short term. These techniques and how Mark's process works can be applied to any time frame. And in these times, both good or bad, this is how you can risk manage, protect your assets, and build a process to capitalize and preserve and create wealth. These two go together. You use the cheat sheet, you use the stocks that Kerry has done fundamental analysis on, what he's high on, what he believes will be the future, and over the next 3 years be the strength of these coming markets. And then you put on top of that the teachings within the swing trading program, the Platinum Channel, the swing trading program, and you use those technicals to figure out when to buy, when to hold, and when to sell or reduce your risk. This is a great service, 14-day free trial. After 14 days, it becomes $60 a month, and we have enormous success. We're seeing great success with our investors and the people who are participating, and this is just value add. If you are interested in learning and how to analyze companies, how to invest in them, and take a proactive approach, this is for you. So check it out. This is interesting. XLK versus XLP. XLK is technology, XLP is consumer staples. In March, or actually August or so of 2019, we saw a risk-on attitude, and we saw a movement into technology up until the pandemic, when the pandemic then took hold and high-risk assets moved from risk-off assets like consumer staples, and we saw that movement down into July or early mid-June of 2020, and then money showed up in your bank account. Government put out money, what I call mailbox checks to get the economy flowing again, and technology took off. And it went on a massive ride up until 2022, when there was a rotation out of risk-on assets to risk-off assets, bringing the XLK lower and the XLP in comparison higher. And we saw that all the way into 2023. Remember this. This is pretty significant in my mind. AI has really been available or public in a massive way for only, it's just going on 2 years. November of 22, ChatGPT came about, and we all became aware of this. If you look at technology, it was a dud for a year until Sam Altman and AI came about and revitalized the tech industry. From 2023 up until now, or actually 2 weeks ago, we saw a massive continuation move into a handful of AI-related stocks. NVIDIA, I believe at one point was up 144% year to date until the last 2 weeks, where it has recently sold off. What this is showing me is we're seeing a rotation in the last, basically since the 1st of July, into risk-off assets in comparison to risk-on assets, and we're coming down to that 20-week moving average. Now, it's gone through that a couple of times this year, or a couple of times, once this year, and it came back in April, May of 2024, made a skyrocketing move, but now we're coming back. Question is, will this rotation continue throughout next week and into the coming weeks and months ahead? Only time will tell. Let's take a look at the NASDAQ 100, the QQQs. This is where the big concentration in technology companies is within this index. And this week we saw a sell-off of 3.96% of the S&P 500. On a weekly chart, it came down to the 9-day simple moving average and stopped. Question is, if it penetrates the 9, will it go to the 20? After the 20, and we've seen it bounce off the 20 back in April, May, or May time frame, and then move higher. If it moves through the 9 this next week and hits the 20, the question will be, how much will this affect the potential for a rate cut within the Federal Reserve? This is something to consider. Much of the S&P 500 and the NASDAQ is market capitalization weighted, meaning the stock price times the number of shares of a company is the market cap of that stock or that company. And so the indexes, the S&P 500, the NASDAQ 100, they calculate the weighting of those indexes by market capitalization. And the three big ones are the Apple, Microsoft, and NVIDIA. And in this week, we have seen a sell-off, or in the last really 2 weeks, a beginning of a sell-off, specifically in those three areas. Let's go take a look at those charts. Take a look at Apple. Now, Apple is down for the week 2.7%. It is way above its 9-week moving average, which still is great as long as we stay above this 9-week moving average. We're in pretty positive territory. But yet, the MACD seems to be maybe a little bit turning over. The RSI is turning south, which is the strength, relative strength index. And the slow stochastic is just really sitting sideways. Is this a case for alarm? No, it isn't, but it's a case for paying attention. It's above the Bollinger Band. It closed below it this week. And you see these Bollinger Bands widening out, and we could see a continuation of that. Only next week will tell, and the week after that. Microsoft, similar, down 3.62% this past week. Broke through the 9 pretty significantly, but yet closed just below it. Question is, will this be a continuation into next week? We're seeing a MACD breakdown here. We're seeing an RSI breakdown in a slow stochastic. Take into account, Microsoft was a part of the CrowdStrike debacle this past Friday when the largest IT crash has ever happened, and Microsoft was in the middle of it because much of their software is they use CrowdStrike as a cybersecurity feature on their software, so they were heavily affected. Will this continue into next week? Time will tell. But the question, my concern here is if we break through this where it's bounced off on the 20, this pink line here, if we close below that next week, could we see a continuation down to the 50 and then, of course, the 200? That would be problematic. And then there's NVIDIA. NVIDIA has been the hype for over a year. It is, in 22, was left for dead because of the risk it basically is subjected to, because the majority of their semiconductors and GPUs and CPUs are made at Taiwan Semiconductor. Back in 22, there was a lot of fear that China was going to invade Taiwan. And I would say to this day, that is still a problem. That is still a concern. The thing is, nobody pays attention to it because NVIDIA keeps blowing earnings out of the water and continues to go higher. The amount of wealth that is tied up in NVIDIA is staggering. Take the stock price, multiply it by the number of shares, and you have its market capitalization rate. When it falls 8.75% in a week, that is 8.75% of people's wealth being lost. The question is, will this continue? Will we see a move back over the 9 and a rebound in NVIDIA in the coming week or so? Or will we see a move to the 20, which is at $103.16 as of this recording on Saturday, the 20th of July? Those are things that I believe the Federal Reserve is paying attention to. This could be, if we see a continuation of a sell-off in these three companies, this could force the Fed to lower interest rates because so much wealth is being lost. If you see a 10% drop in, say, the equity market in general, or the S&P, which represents including derivatives, including the leverage that has been taken out on high-risk stocks, or even the S&P 500, is upwards of $200 trillion. And when you see a 10% downside in just, say, the S&P in general, that's $20 trillion of wealth that is gone. That keeps the Federal Reserve up at night. That is one of those things that they look at and go, our economy is slowing, even though they don't admit it. When you look at the cost of inflation, the devaluation of the US dollar and our purchasing power, we are losing ground. And their concern is most likely, if this continues and we see 401k values go down and people get their third quarter 401k statements, will they panic and start selling? Or could we boost this market up? Now, I know most people say, oh, yeah, but the Federal Reserve can't influence it, but they are paying attention. They have to pay attention, because if NVIDIA goes to 72, which is the 50-day moving average, which is the yellow line, or the lower Bollinger Band, the amount of wealth that is wiped out is enormous because of this concentration that people have put into NVIDIA riding this train. So it's a cautionary tale. If for some reason this inspires the Federal Reserve to lower rates at the end of the month, and it's projected by the Chicago or the CME that there is 100% chance they will lower rates by the September of this year, then what would that do to NVIDIA? What would they do to Microsoft and Apple and really any high-risk stocks? It would inspire the market to go higher. These risk-on movements in Federal Reserve rates would, if they lower them 50 to 100 basis points, in my opinion, you got to be aggressive. You're going to take that kind of move. It's not good either way. If they don't, we're going to continue to see this downside movement, in my opinion. That's my opinion. If we see a move lower in interest rates, we're going to see these stocks reverse and start to head higher. But that's not for another week and a couple of days. That's the next meeting, July 31st, I believe, of this month. We could see the Fed make a move in lowering interest rates. And then in September, they could do it again. But if we continue to see NVIDIA, Microsoft, Apple, and the other Mag 7 stocks continue to sell off throughout this week, coming week, we could see a federal Fed funds rate lowering and a rally into the end of the year in the S&P, NASDAQ, and all the other high beta stocks. Question is, will they? And that is to be determined. So what do? Well, you pay attention, you respect the situation, and you risk manage. Simple as that. Best of US Investors is offering a 14-day free trial of our services. We have one service. We have brought it down to one service called the Platinum Channel, where we offer what is now becoming a very popular item, the cheat sheet. That concludes our week in review. I hope you would really have enjoyed it. Please hit the subscribe button and the like button, and share this video with a friend or person you care about that you feel could make a big impact in their life. In the meantime, go to bestofusinvestors.com and take advantage of our 14-day trial. I appreciate you watching this to the end. Give me a big thumbs up, hit the subscribe button, and we will see you next week. Peace. Live loud.